All right. I think it's that part of the day to crack open some charts and see what's going on in the stock market today. And today's SPY was up 0.35%, and we did get the bull breakout above 510. But this is only day one of a bull breakout, and I will warn you, this is a market with a lot of negative momentum, and we still have another very important resistance just above on SPY 513. So even if we do go a bit higher, I'm not ruling out the possibility we're still going to come down here and close this gap at 504. So do be cautious. But one more thing to keep in mind, looking at Tesla stock, it is without a doubt that retail sentiment shifts very quickly when they see price shifting. And that's why a stock that was just at $138 a week ago is now trading at over $190. And it's the same exact stock, the same exact company with the same exact CEO. And now all of a sudden people want to start looking at buying it. So make sure you have trade plans and you're following those trade plans. And that does include being prepared for either a bullish or bearish scenario, which means if you are a price action trader, you do not have a bias, you're prepared for up or down, and you are going to put yourself in the best risk reward ratios with the best probability to be successful. And you are going to do this time and time again with discipline, consistency, and patience. So when we look at SPY today, we are not getting extremely bullish just because we're starting to break out. This is time to be very alert watching price action as we approach resistance, because there is still a good possibility we could get rejected from resistance and at least fill this gap to the downside. And then of course there's still the possibility we go make a brand new lower low. And without a doubt, this is the bearish scenario you should be prepared for. And while I'm not saying it has to be the scenario that is going to play out, you should be prepared for it. Meaning if SPY did come back down towards 490, you should not be over leveraged in long positions if you're seeing price action rejecting from resistance and starting to head back lower. Now, likewise, if you're overly bearish and you start to see price breaking out above 513 and heading higher towards the top of the range at 520, and you just continue to hold short positions, and then we break out and make brand new all-time highs, you are equally going to have a bad time by ignoring price action. So without a doubt, this is going to be a very important pivot in the market. We are either going right back into the bull market, which means we could test the previous highs and even make brand new all-time highs, or we are just halfway through a correction that is just getting a rebound for a lower high before we continue lower and finish the correction at a much lower price for the next lower low. So I did a members only video, and I'm going to keep my preferred scenario and exactly what I think is going to play out for the members only, but you don't need to know my opinion to follow price action. So it's up to you whether or not you care to see what my opinion is. But as you always know, even I don't care about my own opinion. I have ideas of what I think might happen, but at the end of the day, it really comes down to listening to the chart. And that is the only way you are ever going to be unbiased as a trader. It's okay to have speculations, but those speculations need to be confirmed by price action. On the NASDAQ 100 triple Qs, we were up 0.41% today, and the triple Qs are in the same boat as SPY. We had the bull breakout, but we are now sitting at a very critical test of resistance, and I am calling that zone on the triple Qs between 434 and 435. And just like SPY, we could get rejected from here, and if we do get rejected, the first place I'm going to be looking for to the downside is this gap fill at 425. If we break through 434, then I think we could push back into the 440s and test the top of that range yet again. And above 434 to 435, it is going to be looking a lot more bullish because we already have the higher low into the higher high on the price action. So these are very critical resistance zones for SPY and the triple Q, so pay attention to them very closely. And as I just said on SPY, be prepared for either of the scenarios and don't have a bias. Trade what the chart is telling you, and that is going to be whether or not price rejects from here for the short trade, or buying at lower prices for the long trade, or continuing to hold long on the bull breakout above the resistance break of 434 to 435. So it does not matter how you play it because you need to manage your risk either way, and we have no confirmation yet which scenario is going to play out from this critical pivot level. On the Dow Jones, we were up 0.39% today, and the Dow Jones is one of the indices that has not yet broken out to a higher high after a higher low, but I will tell you right now, every other index has, so I do believe the Dow Jones is going higher, and I do think we are going to see it pushing higher towards 390. Now, this is simply just based on looking at the entire market, and if the rest of the indices are breaking out, I see no reason why the Dow Jones can't as well. So if you are bullish and looking for a lower risk trade, this could still be a laggard that's trying to catch up, which could be for a nice push higher into the 380s and 390s. Now, if you want to wait for a confirmation of a breakout, we need price back above 385, and then we should easily get higher towards 388 to 391, and possibly even the gap fill right around 395. If we get rejected from 385, we could come back down to this very important support support at 377, and if we break that, it's a straight line flush to 370. On the Russell 2000 IWM ETF, we were up 0.81% today, and like I said, the rest of the indices have this higher low, higher high, which you can very clearly see by looking at the price action that IWM did break to a higher high after a higher low with the confirmed break and close above 199. So above 199, I think the small caps can continue pushing towards 203 and a gap fill above 204. And in this, it's just as simple as staying bullish while we have the bull breakout above 199. And if we can't hold the bull breakout above 199, then we're still looking for 196 and 193 as very critical support zones. On the ARKK ETF, we were up 2.41% today. So just like the small caps, SPY, and the triple Qs, we have a higher low, higher high. So I do believe the Dow Jones is going to try to catch up. But we also do have a gap to fill now at 44.27. So from this resistance right around 45.4, we could get a pullback to close the gap before we continue any higher. Or we've already seen the lower high at the resistance trend line and we're going much lower, which could bring us all the way back down towards 41 to 40. So very critical support here will be right around 44 and 42.4. And if we break those supports, it's going to be looking bearish. On the VIX, we were down 2.26% today. So the VIX is continuing to crush and we did start to break and close down below 15 today, which is the bullish scenario for the VIX because if the VIX is crushing, that means fear is leaving the market, and if fear is leaving the market, the bulls are going to take back control, and we're going to see the VIX down near 13 yet again. So we're not looking for any craziness in the VIX unless we see very sharp rejections from the critical resistance, and in that case, we should see the VIX spiking higher towards 17 and 18 yet again. On Bitcoin, we're currently trading just below 63,000, and we do have a lot of rejections from triple, double, and lower high rejections, but we don't have the official confirmation of the bear breakdown, which will be the breakdown below this bouncer die support at 61,000. For that reason, you can't rule out the possibility the bulls still take back control, get a higher low here, break the previous high at 67,000 and start to push. So this is why I tell you can stay bullish above 61,000, but if we break below 61,000, that's going to be your price action indication to get risk off because we're going much lower, and I do believe much lower would be somewhere around 52,000. On Nvidia stock, we were up 0.03% today, so flat on the day, but intraday we did retest the breakout, which was the break above 857, and as you can tell from the arrow, I do believe we are going to all-time highs very soon between 994 and 1032. So without a doubt, this is a higher low, higher high breakout back above the pivot at 857, holding the pivot for 2 days in a row, which means we could start to push higher from here. So I think Nvidia now is as simple as staying bull above 857, and if we can't hold above 857, we could come back down towards 823 to 830. If we continue higher from here, look for a push to the top of the range in the 900s, and then if we break through the top of the range, we should see those all-time highs. On Tesla stock, we were up 15.31% today, so we have officially finished this V-shaped recovery that I told you could bring us back to 173 to 183, and as of today's close, we closed above 193. So we did go much higher than the V-shape allowed for, which is completely fine. It's still a capitulation recovery pattern, which means the bulls are now officially back in control of Tesla stock, and you can see there was very high volume today, which likely means we had a ton of short sellers getting squeezed out because even retail bulls who love this stock were still expecting it to go lower before earnings, and I told you this was a capitulation pattern, which usually has a V-shaped recovery, and that was 100% technical. I couldn't care less if earnings was good or bad. That's what I saw on the chart, and that is exactly what played out, which is another reminder to be very careful following fundamental biases, because a lot of those fundamental analysts who are downgrading the price of Tesla overnight are now magically raising their price targets, but we've already hit all of their price targets. So what do you think they're going to do now? They're just going to continue to raise them. So follow the charts, not anybody else's opinions. Everything you need to know is right here in the price action on the chart. And in Tesla, it's just as simple as staying bullish now while we're above 183 because we could start to push to the 200s next. On Apple stock, we were up 2.48% today, and this is another trade we just continue to knock out of the park because we were buying down here near 165 and we were looking to sell up here in the 170s, and today we hit as high as 176. So without a doubt, this is a great time to lock some profits because we're in this resistance zone between 174 and 177, and this is where the bears were able to reject the bulls last time, so this could still be a lower high, and we could still get a pullback into earnings, which could bring us back down towards 172 to 169. If we pull back in apples, I think that's a buying opportunity, especially for me personally. It's very easy to manage risk down here on a blue chip name like Apple, but do be aware earnings is coming up this Thursday, so if you don't don't want to trade through earnings, then just simply don't watch this stock until next week. We have all the critical levels and can manage risk accordingly, so just watch the levels and price, and if you want to stay bullish, you could easily do that on a blue chip name like Apple. So jumping back over to the S&P 500, this is a huge week full of big tech earnings, FOMC, and unemployment data, so it should be great for day trading and swing trading. That is exactly what I've been focused on doing in the Stock Channel Discord server. So if you want access to all of my intraday updates and technical analysis, as well as my trade ideas, then you need to come join the Stock Channel Discord server, and you can find out how to join the Discord server by clicking on the link in the description of this video. So have your trade plans ready, be prepared for any scenario, and then let the price action do all the talking. And as always, manage your risk around these critical levels. That way, if you do lose a trade, your risk is controlled and you're not going to blow up your account. So stay disciplined and stay patient and continue to look for the next best trades, and you are going to do just fine in this market. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.